We're bringing a little of Wall Street to LaSalle Street on April expiration Friday. Each Friday I'm here for expiration. We normally report from the S&P pits. Behind me today you see the corn pit. This is where a lot of the action in the underlying commodities take place for the stocks that we follow. So what's an investor to do? April's been a very busy month for us. We had taxes to think about. We're in the thick of earnings season and expectations really aren't that fantastic for it. The key for this earnings season so far has been under disappointment, which is really not what we want to look for. We want to look for some underlying growth. How does an investor play this? How does a trader play this? I'm a fundamental analyst at heart. I look at 6, 12, 18-month price targets. We're looking at balance sheets there. We're looking at the strength of these companies and the fundamentals that underlie them. So what do you do as an investor if price targets can't really be that far out? You have to also put on your trading cap and understand what it's like to momentum trade. You can have a long-term thesis on a stock, whether you're long or short, but you also have to know how to play on the opposite side if there's some shakiness. My 2012 pick happens to be the ag and fertilizer space. And again, behind us, this is where it all takes place on the underlyings. This is what makes the stocks move. We expect some choppiness in Q2. We still have to get through some of the unquestionable weather trends, but this is a basic supply and demand story. This isn't like a biotech stock or a tech stock or a consumer stock where it's based on trends, whether it's the consumer or an enterprise consumer. This is supply and demand from a forward-looking product. These are trading in the futures over here. So again, this is a basic supply and demand product. Q3, Q4 is really lining up on all metrics, and we saw in the underlyings yesterday in the price action.